absolutely brilliant. I mean, you guys are going to be net returning a 0.06, 0.5, 675 or something percent return on that. So that's great. If you want to be shorting from the highs on this one, good afternoon, ladies and gents, and welcome one and all to your Markets Now session today. We are going to be digging into the market report this afternoon and then finishing off with our US indices, as is the standard practice on our Monday mornings. Regardless of that, I hope you're all doing extremely well for those of you inside the trading room and on the outside too on YouTube, who will no doubt be catching up on this video over the course of the next 24 hours. Hope you're doing well, guys. Looking forward to this trading week. Now, we don't really have too much in terms of fundamental or major economic data releases this week. We are going to be relying upon our more organic trading volume as opposed to seeing a lot of commercial inflow and outflow from those particular economic contexts. But that being said, last week I think there were quite a few relatively decent assets starting to shape up quite nicely as we look to positions building in for the next legs in their respective moves. Tomorrow is, of course, going to be the major order book development day, as is always the way on our Tactical Tuesdays, and that's for our members inside the trading room. And then following up on Wednesday, we will have a big public event for the market recon session. Thursday is going to be a Thursday reversal session where we look at how the order book's developing and playing out as always, and taking away positions as we see fit, leading into Friday where we focus specifically on the US Open itself, leading into the next weekend. Now, this is going to be my last trading week of the official summer holiday period, as I will be driving through Italy with the missus over the course of the next week and a half or so, and enjoying some, I believe, well-earned time abroad as we go and try to summit a very large mountain in Italy. It will be our largest mountain that we've summited yet, which we're really looking forward to. And also some nice experiences in various places across Italy as we stop along the way. Milan, Verona, Tuscany, the Amalfi Coast. So lots and lots of places on the list that we're going to explore. So really looking forward to that as well. But anyway, that being said, I'm not done yet. Obviously, we've got this week to go. We've had a little bit of a slowdown with trading performance, I would say, over the last couple of weeks. It's not exactly been very turbulent, but when I say slowdown, what I do mean is it's actually been quite quiet. The last couple of weeks trading performance has only added maybe 1 to 2% each week to our net return, so it's been a big slowdown since the prior few weeks where we ended up seeing an incredible amount of growth being added week on week. We were between 6 and 8% per week for about 3 weeks. So it was very, very significant. We saw a big increase in trading volume as well throughout the course of July and the first week of August. But so far, for the majority of August, let's say, it's been a big slowdown. And I believe that's quite cyclical. There's quite a cyclical connection there as well to what's going on. So that all being said, as I say, we're going to be digging into the market report this afternoon. We're going to be stuck into that. After the market report, we're going to dig into the US indices, get ourselves set up for the US session this afternoon, and take things from there. Right on. So let's get going then without any further ado. So starting from the top then, we last week had huge exposure in the Forex market, 62.5%, which is quite extreme as well. I mean, as far as we're concerned, in how we sort of carry our work out inside the markets, inside the fund here, it's quite surprising actually to reflect and see a 62.5% exposure in FX last week. Indices took 25% of that, and commodities finished it off with 12.5%. So not very well rounded, I would say. A little bit of exposure in the indices and commodities, but predominantly seeing trading volume and FX. It was a small batch of data though, team, so please do bear that in mind. We only had, I think, maybe 12 positions in total. That's probably about half of where we usually sit. So, it's a very small data set. Going down into the weekly return, it was a bit up and down, obviously more up than down, which is always good. We did get a realised net return of 1.59% from the 11th on. Tuesday, Wednesday, Thursday, Friday were our trading days. We ended up Friday in a small loss. We didn't end up taking any trades at all on Friday afternoon, which was a little bit of a shame. Tuesday and Thursday were our profitable days, seeing about 1% and 1.1% respectively on both of those days. And we did have a down day in the middle on Wednesday as well, which was a 0.25% loss day. So a couple of drawdown days, a couple of profitable days, ending up with 1.59% net return. So far this year, we're up at 107.22%, which is absolutely great. Because of the big slowdown, though, we have gone from a weekly average of 3.7 to 3.2, so it doesn't take long for that to really dilute down as we sort of see the annual returns, divided out across the weeks that we're in the year so far. I think it's been 33 weeks, if I recall, into the year so far. So yeah, it's all good though. I mean, it's still looking good, and the risk reward is very stable, 2.6%. So that's good to see as well. So moving down into the volume so far, again, we're still very much on the sell side of things more than the buy side. August looking at, I don't know exactly what that is, maybe 15 shorts versus 10 longs. So yeah, we'll have to see how things develop over the course of the month. But we're still definitely following the trend of July so far with that one. And then when we compare our funds return versus things like the S&P, the UK FTSE, the UK FTSE last week did have a down week, so that was great. We did outperform that, but we did not outperform the S&P 500. So if you simply bought and hold from the S&P Monday open to Friday close, you could have earned yourself a few extra quid. Don't suggest you ever do that, but there you go. That's from obviously bottom to top. So moving down then into the market trends and opportunities, getting a little bit more juicy now. We've got a lot going on down here. US 30 Dow, pound against the Oz, natural gas and silver. We've got obviously the full technical breakdowns. You guys can all peer into that in your own time. We've got a lot going on in terms of the analysis that's provided alongside them as well. Lots of geopolitical situations going on this week. As I say here, I mean, sterling is holding firm as sticky UK inflation and the Bank of England's reluctance to commit to rate cuts continue to lend support. And this comes as, obviously, whilst the Australian dollar faces pressure from weaker Chinese demand as well and softer commodity prices. Now, what that really translates into is predominantly around tariffs at the moment, which is having a huge wave of impact across the G10, I would say so far. But looking at from the currencies perspective at the moment, I think we're probably going to get a little bit of a downward spiral with the GA back into liquidity there, as you can see, and then with the continuation, sort of maybe Tuesday afternoon, Wednesday, Thursday, up until Friday. I'm not actually going to be targeting the top here, more so just the previous high, with an expectation that possibly the week following we could see big liquidity at the top, but ultimately this week probably looking for a couple of bars down and then a couple of bars up, and that'll take us to the Friday close. US 30 Dow Jones, I'm not going to speak these word for word, guys. Obviously I spent the morning writing these all out for you, so you can go and enjoy those at your own leisure when you can, if you haven't done so already, of course. I have outlined my thoughts here, obviously, but from the technical standpoint, we've got the breaker structure down here, possibly looking for that movement down into the big liquidity there before it comes back up again by end of week. Very similar situation, I suppose you could say, to the GA and where we're trading there at the moment. Natural gas, I'm on the fence with natural gas at the moment. I did obviously, I want to put an energy market in there for the sake of getting multiple asset class exposure out. But both the oil charts at the moment, US crude and UK Brent, they were just no-goers from a technical perspective, even from a fundamental perspective. But looking at the natural gas chart, I was thinking there might have been some possibility there. But honestly, after doing my research before writing up the analysis for this week, I just don't even see the fundamental bias for that either. So I would say, just as we're, this is why the market report breakdown video is very important to go along with the report, to be honest with you, because natural gas is here, but I would sort of advise caution around taking just a blind long from a breaker structure at the lows up to the high. I don't think it's going to play out exactly like that. I think there's going to be a lot of stagnant price in liquidity between those 2 points in time. And I don't want you guys getting caught in something for several days with not much happening. And especially when we have the higher risk at the moment from the flare-ups geopolitically, of course, that's happening behind the scenes. And some of the weather as well, actually. Some of the weather is playing a big impact or a big part to natural gas currently. So there's certainly things going on behind the scenes to cause a bit of a shake-up there. But we do still have a lack of demand. There is still very much a lack of demand here at the moment. So, it's the technical setup. It looks long. For me, that is a long market waiting to go. It's waiting for its next leg. It's just waiting for an excuse. But the problem is there isn't really an excuse just yet to get that going. So we're going to have to be patient. And then, of course, we got silver. Silver is a bit of a rock and a hard place at the moment. Ultimately, the fundamental bias is for it to continue ranging. Thoughts down here, of course. We have the price currently trading here, possibly looking for a rejection from the previous highs. And then this will be the decider. Is it going to break structure and rally back up to the top of the range, or is it going to hit this sort of median point and come back down to those previous lows? But this is going to be the point in which we get the decider on that. The margin between where price is currently trading and the point of liquidity up here is pretty decent, and we could possibly look to intraday day trade that. But obviously we're Monday, we need to wait for the market to find its feet. We'll get back to it tomorrow and see where we're at and if we can get a couple of trades off on that one. Or, well, maybe not necessarily a couple, but at least the first one. So moving down into market challenges then, as I said, it is a relatively quiet week from the econ this week. We only have 2 major events. Obviously, we've got more econ being released than that, but these are the only ones you guys want to care about. That's FOMC minutes and the Fed Chair Powell speech. So both of these, in terms of the challenges to the assets that have been provided in this week's report, they have registered a 5 out of 10. So we're probably looking at, obviously a bit of market impact here. It's not going to be CPI last week kind of level in the stock markets, but it is going to be impactful enough. Probably will see some whipsawing in the US stock markets, for example, and you will want to watch any dollar prime pairs and possibly even euro crosses if you get any cross correlation between the euro and the dollar there as well. Obviously, we'll be breaking this down in real time day by day this week. But as I said, there's not really much to look out for. Just be aware of the FOMC minutes and the Fed Chair Powell speech from a risk perspective. As we come down, we look at commercial long versus short data. We have got some pretty interesting numbers this week, I must say. We had silver last week, which was at 62, so that's dropped 20%, which is quite phenomenal, to be honest. Natural gas is now down at 39. VIX volatility index has actually risen. I can't remember what it was last week, but it's now at 35. Pound against the odd, that's not really much to sort of note there, and neither is the US 30 Dow Jones, apart from the fact that there has been quite a big reduction, because last week was 52.5%. Commercial money was long versus short. It's quite a big reduction. We're now at 47.44. So there's a big jump down in the bulls there in the US 30. So probably on the side of shorting rather than longing it at the moment. The most notable call out for me has got to be silver. 20% reduction in buy orders. That's a lot of short. That's a lot of short money. There's a lot of short money coming into silver at the moment. So just going back up here to what we see there, possible to go long to this point. This is where commercial liquidity is going to be. Then once the commercial banks and institutions get in, we're then going to see that big decline back down to, whatever it is, the previous lows there. You can just see them on the chart, like this area, for example. That's probably what I'd be looking at. So moving down then, finally, third and final page of this week's market report, the Economic and Order Book IR. We've got the impact scale for the FOMC and the Fed Chair Powell speech. So the FOMC is registering a 6 out of 10 now, on the broad impact to all asset classes. And the Fed Chair Powell speech this week is actually registering as a point higher at a 7 out of 10. That's really quite interesting, to be honest, seeing the Fed Chair Powell speech raising higher than the FOMC minutes. So I would be very cautious about that. I really would be paying that some respect and just holding tight, trying to keep your desk as clear as possible whilst this is taking place, with the intention of then obviously buying in on the volatility or selling into the volatility, vice versa, and then looking what happens thereafter in the short term. If the market, if the market freaks out, of course, what Fed Chair Powell's going to say, or what he does say, then we don't want to be on the wrong side of the whipsawing, for sure. So we'll pay that one the necessary respect. It could be a complete non-impact event, and a lot of them are. But this time around, yeah, it certainly seems like something's going to happen. So we'll pay that some respect and see how it plays out in the week. In terms of money flow trends, buy side versus sell side, total liquidity, not really much notable call outs. Currencies 49.1%, as you can see, indices 55.5%, a lot more long liquidity than short. At the moment, 5.5% over the threshold, and commodities just a little bit under there, 47.3%. That's kind of teetering on the low side for sure, but they're all within the normal breadth there. So I don't think there's much point digging into that one with, too much effort. Going down into equities and focus, a lot of interesting points, but predominantly all about plug power this week. So clean energy funding momentum and the recent cost-cutting measures that they've undergone as well. So we're looking at a potential corrective. But you guys check that out again at your own leisure. Institutional buying interest by sector. You guys are gonna have a jaw-dropping moment here. $4.71 billion hedge fund dollars inflow into technology this week. Bear in mind the previous 2 or 3 weeks have been sub 1 bills, or maybe the 1.1 level. So $4.71 billion of inflow from funds into the tech sector this week, into tech equities. Now, again, you guys might be like, okay, that's great, but how do I use it? Well, think about it. What's one of the major indices that we trade, guys? Major indices that we trade, NAS 100, right? NAS 100 at the moment has had a little bit of a peaking moment. It's had a peak, it's come down, it's currently in a retest mode. This could seriously be getting ready to take off for the next big leg as well. So it translates into everything that you touch in the financial markets, essentially, as long as it's got technology in there. The S&P 500 as well, that'll touch that. This is just total inflow. So you'll be looking at UK equities, UK tech, and tech equities that will be getting powered up by that as well in some level. The interesting one that's never registered on here before is actually defense. The defense sector had 1.32 billion added in inflow, in capital capital inflow. So that's an interesting one as well, seeing the defense sector coming up there in fourth place. We had an equal measure in energy and biotech. But yeah, interesting to see defense there. I suppose not too surprising. And that is, of course, that. Now, disclaimer, the information provided in this market analysis report is for informational and educational purposes only and should not be construed as financial advice or a recommendation to trade or invest. Trading in the financial markets involves a significant risk and may not be suitable for all investors. If you want the full disclaimer, please read the bottom of the market report. Thank you very much. So that is the market report this week, guys. Of course, lots and lots of information down here, so please feel free to go and check it out as much as you like. And if you're on YouTube, you can download your copy inside the trading room. The trading room for the basic members is completely free, so there's literally no excuse for you not to. Come on in, check out the trading room for all the freebies for you guys. The market reports are kept in the channel under UTC My Report. There is an announcement for it in the general chat, so if you come over from YouTube and you sign up, you will see that the last post in the general chat is about the market report, and you can download your copy entirely for free. If you are already inside the trading room, of course you guys know where it is, so I'm not going to drag on about it to you lot. And yeah, we'll take it from there. So that's the end of the report, guys. We'll have a quick look at the US Open now, set some opportunities up for you all for this afternoon, and go from there. So let me just flick over to the charts for you all. Just bear with me. Go from there. and over to there. There we go. Excellent. So you... no, that's not coming up. Come on. You can do it. There you go. Okay, great. So you should all be able to see the charts now. Hopefully so. Hey, good afternoon, Coratim, and good afternoon to everyone else as well. So, US indices on a Monday afternoon. What are we looking at? So at the moment, US tech stocks, as I said, having a little bit of a rebound here. We've had a nice big leg up. We've broken structure, and now we're coming down for the also famous BCR. Currently, where we're trading, doesn't look like I want to be short on this market at the moment. Definitely looks like I want to be on the buyback trend continuation side of things. The 15-minute time frame shows this in even more detail. Quite nice knee-jerk reactions coming from liquidity at the moment. In the most recent bit of data, it looks like the orders are building up for the next high. So, I mean, at this stage, the path of least resistance is absolutely long, green, and strong. We don't want to be on the other side of this. We're looking at the inflection point, which is created there at around 2380, excuse me. And we're possibly looking for a break of structure entry on this one, which could either be there or down here. I don't want to go there. It's a bit too close to price action. So what I'm going to do is I'm going to have my break of structure point, and that's going to come from sort of this low right through here. Right, and then that is going to be this afternoon's trading opportunity. Now, make no mistake, guys, this is a big trading margin, actually. Yeah, it really is. So this is kind of an intraday style trading opportunity to be taken via quite an aggressive breakout from the US Open this afternoon. But it does make perfect sense. Really nice trading availability. The margins are pretty solid here. It just looks good. And it yields a 1 to 3 based on 0.25% risk. So we are looking at a nice return from this one as well. So that is trading opportunity number 1. And now we're going to head over to the US 30 Dow Jones. Now, the Dow Jones looks quite different from its technical setup. We have huge liquidity points either side of price action on this one. This is actually more predominantly a daily level for a break of structure point. So big liquidity on the 15-minute time frame for sure. We've got the major daily all-time high level up here. This is the one that's been keeping price at bay for a really long period of time now. So we do need to pay that one some respect as well. There's no way we can just simply aim for areas up and around here because it doesn't make sense from a risk perspective. We do, however, have the areas like this, which can definitely be used for a target profit. We have the floor of these sort of moves down here. The problem with this Dow Jones is it's trading right slap bang in the middle of these two trading margins. That's the problem with it. We've already got the break close retest. We've got a really nice continuation underway at the moment. So the only sort of thing that we're looking at here is sort of being able to achieve is a rally back up to the high, followed by the rejection of that high and a push down into liquidity below at 44.92. So what we're going to do from this point on is we're going to look for an entry for this short, and the break of structure is going to be the way forwards from liquidity with the weight of the commercial sellers above as well. I would say that the break of structure is going to be probably about there. And so the trading opportunity for this short this afternoon is going to look something like this. And that would be my short in this afternoon's Dow Jones. But remember that we can only look to take this after price action has reached the biting point, which is there. So this is absolutely key part of the process. Now, we're not going to completely ignore the long. If price action comes down into liquidity first, we want to be able to take a long away from the lows as well, prepared for every eventuality. So what we're going to do here is wait for the price action to come into liquidity. We're going to look at that level there being the break of structure point. Why is it? Because of this red candle followed up by this green candle. And for those of you who don't know, I'm not colorblind. I know this is blue and yellow. But, you know, for those of you who are used to red and greens, there you go. That's the break of structure for the long. We've got the entry. We're going to have the target at the sort of daily level of liquidity, not this one on the 50-minute time frame, to be fair, but we're able to have a stop loss sort of really nice and deep into this area down here as a result of that. So that trade idea looks quite nice as well for the long. So we're going to have this one over here for the short, this one here for the long, and we can, yeah, use those as best we can. Let me download that one for you all, and I'll fire that out one in a moment. And then finally, to wrap it up, we could get a full house here, S&P 500. I think this actually looks a bit better than the Dow Jones today. So really nice start to the week for the technical setups sake of things. Have a nice high. We've got the nice low, very similar to the NAS 100 here, guys. Looks like we've got positions building up at around 6,444. Asset value at the moment is 64.50. We've got a really nice ceiling here that can be utilized as the breaker structure point for the longs today. So very clear roadmap as to what we want to achieve. We've got entry here, target up at the highs, and the stop loss is naturally going to be, I would say, probably at around that sort of 50%, maybe a little bit lower than the 50% of the margin between the breaker structure and the point of liquidity down below. This is yielding a 1 to 2.51. Absolutely brilliant. I mean, you guys are going to be net returning a 0.06, 0.5675 or something percent return on that. So that's great. If you want to be shorting from the highs on this one, let's have a quick look, see if there's something we can work out here. Not hugely, I must admit, not with the price action that we have available. That there is a potential point for a breaker structure. Let's drag it back to the left-hand side because then we can see if this works. And actually, do you know what? Look, we've got this little point down here, which is a little bit concerning. But apart from that, this actually does play out really nicely. So if you're in doubt about any of the levels you want to use, look left first. You always look left. By looking left, looking at previous data, you're always going to be able to see if that level has been respected or whatever multiple times over the past. So that's not too bad, and I'm happy to take some risk on that one. So what we're going to do is we're going to line up a short. That's going to be entry there, targeting down here with a stop loss. Very much the same. We're going to have the stop loss there this time, which is just at the belly of the big zone above. And that's going to yield a 1 to 2.86, net return 0.61, 0.62. So that's also looking really nice today. But remember that the short comes as a result of price action rejecting liquidity. Must come up to that 64.65 point, hit it, and then reject back down, contract, and then we can jump in for our short. And that, ladies and gents, is it. That's the full house, all three US indice assets for this afternoon's trading. So we are currently at about 2 o'clock GMT. We've made good time. We've got the report done. We know exactly where we are for the week ahead. FOMC and Fed Chair Powell's speech are the two major sort of primary economic events. We've got all three US indices primed and prepped for us this afternoon as well. It seems pretty good. Things seem pretty good. So if there's no further questions, any questions at all from inside the room? Or do you all know exactly what you should be doing? Excellent. No? Excellent. Good stuff. All right then, team. Well, I'm going to leave it there then. I hope you all have a fantastic rest of the day. Good luck out there with your trading this afternoon. Please, for those of you who are inside the trading room, let me know how you get on with your trades, of course. And if you are not inside the trading room and still viewing us from the YouTube side, subscribe to the channel. Hope you enjoyed the video. Look forward to catching up with you in the next one. And of course, come and try us out. Jump in the trading room and see what it's all about. Be happy to take you for a walk around things and show you the ropes. So take care, guys. Have a great trading day, and I look forward to catching you in the next one. I'll see you then. Bye-bye.